When is it smarter to go for cash flow or capital growth or both? Well, there's a couple of strategies you can consider. The first one is just a cash flow strategy. And by cash flow, it means basically whether the property is positively geared, where the rent is more than the income is more than the expenses of the property and it's paying you cash flow month on month. Then there's neutral cash flow, where the expenses and income break even and the property is not costing you anything to hold. And then there's negative cash flow, where the property is costing you to hold, the expenses are more than the income that you're receiving for that property. Often, people focus on just cash flow, not. And then on the other extreme of that all is capital growth, where you're focusing on increase in value of the property over a period of time. So sometimes people get fixated on one strategy or the other, but if you were to just look at cash flow by itself, then you may be ignoring capital growth altogether and you're just relying on that cash flow. But capital growth is what generates wealth. That's right. And you need to remember that if you're focusing just on cash flow, often lenders also cap how much rental return you can use towards your borrowing anyway. So if the rent return is too high, they might say, well, we'll use only 60% of it or 70% of it towards the borrowing. Or even they cap the rental yield as well at times, depending on the bank. Yeah. And also, if you are just focusing on capital growth, and generally capital growth properties are negative cash flow. There's so many of those you can hold, right? Yeah. You may be capped out before you know it, just because you're relying on that negative gearing. Yeah. And there is a third approach, basically a balance between cash flow and capital growth. So with that, what you need to focus on is the rental yield of the property. Yep. And so rental return. So obviously, the higher the rental return, the lower the vacancy rates in an area. And also, secondly, you need to be focusing on the fundamentals. What is happening in that area? Yep. And that's what will trigger the capital growth. So whilst a property can almost look after itself, be neutral to positive cash flow, or maybe even cost you a little bit to hold, you have an asset where action is happening, the government is investing in other private spending happening, there's schools, it's a desirable area, people want to live there. For whatever is on offer there, then that may find you that sweet spot where you have the rental return, but you have money being spent in the area, which will drive future capital growth. Yeah. So that all comes from looking at the fundamentals in the area, on the ground knowledge. That's right. And often people get sucked into, well, I only want to focus on cash flow, I only want to focus on capital growth, and it's a mindset thing, really. Focus on what gets you to that desired outcome, not just stick to one. Find a balance potentially so you can get to your goals, because ultimately it's the goals that matter. And I'd like to also add that often in my conversations with people, I've heard them say, I want cash flow positive, and they ignore the capital growth aspects of it altogether. So you need to be mindful that you're not ignoring one at the cost of the other. You need to find that balance so you can continue growing your wealth through it. Yeah, well, we hope you found this useful, and we are looking forward to speaking with you soon.